Hello, Warriors. Bran, Ingmar, how are you? Shalom, AJ, Michael, all my Trading Warrior brothers and sisters here today. How's everyone doing? Good morning, Ryan.
Am I in your good books still?
Huh?
Am I in your good books?
You are on my good books. And you know what? The whole team is. This was a pattern in play that everyone caught. Gordon posted it on Twitter. Nice, very nice. And then something I noticed here yesterday, and just so people know, everything doesn't happen during phase. So sometimes you have to let the market trade, similar to you have to watch the horses during their parade before they enter the gates to get kind of a feel for what the field looks like out there. And was after phase, Blake put out a short in the S&Ps because push notification, if you were a member, just think about that opportunity cost. So it's about 50, 60 handles here in the S&Ps. So like I've said before, it's the tip of the iceberg here. And a lot of ideas happen outside of phase. And you could have been doing anything, anywhere, and you would have gotten a push notification on the sell in the S&Ps and been able to be there. So what's your take today, Ryan, in FX? We have, the euro about unch and pound a little weaker than euro for the first time that I've seen in a while. So does this mean that EG might be trying to bottom here? Oh, there, it did what I thought it would do. It does it at night, always when I'm sleeping. So, okay, so yeah, cleaned out the stop. Remember, we were talking about this yesterday, that I wanted to see one more low. It would not confirm. It didn't. And now you have this kind of day going. It could be a real nice reversal day, which now makes euro, when you're bearish a dollar, your preferred long. And when you're bullish a dollar, it makes cable your preferred short. So I think that's significant what EG is doing here today. How about you?
Yeah, it came over the data. We obviously had the big CPI report, which, as I've been warning people, stayed sticky. Headline inflation dropped to 8.7%. It was expected to go to 8.2%. So not as low as people expecting. The core went up 6 pips to 6.8%. So a big jump there. And the market initially bought pounds on the back of that. They've piked up Bank of England rate expectations. But I think that was tempered somewhat by the PPI numbers, which did show decent drops, and that obviously feeds into CPI at a later point. So we got that move in euro sterling. It's been trading at 86.70, 87, 15, 20 area for the last couple of weeks or so. So no surprise to see it break, and no surprise to see that break not last, and we go back in the box. And as I said on the flow show, we've had a crack to the downside, and if it ain't going down, there's any other way it will go. So I'll be on watch for a break of 87, 15, 20, and then maybe we have another look up towards 87.5.
Yeah, I guess through there, then you have something important happening back over 87.5. I just want to point out yesterday when I was talking about metals, because of the gold silver ratio, I said, if you want to try metals for a bounce, gold was the one. They both worked, but gold still has a stronger structure than silver, and we were talking about it down here. So silver was making new lows. I mean, there was nothing wrong with a 30, 40 cent pop, but you could tell the structure is still stronger in gold. So gold is still your preferred long there. I don't know, Apple. I have Apple on my mind. The yen coming off a little bit. You do have some nice divergence here, Ryan. I mean, maybe this is
Yeah.
1 and this is 2. We pull back and get 1 more. Our yields coming off with the yen. Let's see.
Not awfully.
A
This one
little
looks like
bit.
it's setting up for something, doesn't it, dollar yen?
Yeah.
It's not coming down, but it seems reluctant to push those highs. So something's got to give one way or another. We're going to bust that 139 and next stop's 140, or we're going to give it up and head back down to, you know, maybe 137s even more.
Yeah, it looks like when this stuff starts happening and you start diverging and then just making marginal new highs, that's usually distribution. So we'll see about that too. China's coming off a little bit. Same, you know what? I mean, the yen and just a matter of magnitude, but I think they're identical charts now. So there's your second drive there in USD yuan too. Why are they so correlated?
It's really all the dollar and the yield story, but there's obviously stuff going on in China as well. This one I think has a bit more room to roam. It did what I wanted it to yesterday or like overnight. It just made a new high, even if it was by 50, 60 pips. That just keeps the sellers on their toes. That they're not got a top in. The pullback's pretty shallow. So it's technically still looking like this wants to push on a bit higher. The PBOC keep raising their fixes by 200, 250 pips, which is significant, because if they want to put the brakes on, that's one of the indicators they can show the market that they are putting the brakes on. But they've raised that some 400 or 500 pips in the last 2 days, so that gives it the green light to go higher. But as I said, if it's going to take a move above probably 615, maybe 620 before they really start jawboning it. So until then,
dollar has the same chart too. They're all in second drive formation. I just want to show this for a second. These were the earnings in Apple, and this is the big channel. But this wedge line goes all the way back to the December lows of 124 or so, and we've broken it. And then but the go signal for people that are more conservative than me is going to be closes back under 170. I think we're going to open around 70 and a half. So this could be a big day for Apple, because if we get back inside this channel that we broke out of, then it opens up the channel again to be, maybe 152 and then maybe 120 if you're a bear. So, and this is the most widely held, and people buy Apple for a flight to quality. They're going to find out that there's, I think, risk in Apple and Microsoft. The two leaders put in some pretty lousy days yesterday. So, and let me ask everyone here, who's got copper? I hope if you have it, you're short. We've been talking about the decline in copper since here, and then the test of 401. So thought we could go to, challenge a speed line, and we're probably going there. That's going to give us about 340 copper. So that too was not a real bullish sign for the economy. And even NASDAQ, I don't think you could ignore. It's been the leadership, but I don't think you could really ignore the reversal day it had yesterday. Outside day, bearish engulfing candle. So correction time. We'll see. I'm not going to use the C word yet. And who else is here today that wants to, have some ideas? Any news, Ryan, that we have to pay attention to today?
No, there's no real data out for the rest of the day. Maybe keep an eye on the oil stocks data later. So there's nothing from that. We do have Bailey speaking in roughly 50 minutes, and that could be a bit of a pound mover because he's speaking to the Wall Street Journal, so it's bound to be about monetary policy and probably the inflation report today. Yeah, keep an eye on that.
FOMC minute.
FOMC minutes, but
yeah.
Again, we've heard from every Fed member 1,000 times since the FOMC, so I doubt they're going to tell us anything new.
Yeah,
but, I won't be staying up for it.
Okay, so we're on the S&Ps. We have a chance for a 2-week reversal. Still sanguine, Steve, on the S&Ps, even though I know it's only been 1 day from yesterday, but so much for the 4,200 breakout that everyone was so focused on.
I'll tell you, Dale, exactly what I said in the morning ads yesterday, right? Because we talked about the S&P. I mean, the S&P is the benchmark for risk, right? Globally speaking. So I did speak specifically about the S&P. Before, I mean, we were just barely negative when we had this conversation. I'll take the screen for a second so I can show you, okay?
Are you sure?
Okay, so I explicitly said yesterday that, listen, we are testing for the 4th day again this resistance, and as you say, it's not just the horizontal 4,200 area resistance, it's also that I'm monitoring this formation as an expanding triangle, right?
I remember from last week, yes.
Yeah, so I said, listen, even if we don't break out and we get rejected from here, that doesn't mean that we should immediately turn bearish, because the only thing that it means initially is that we're going to be spending more time consolidating. In order for us to actually turn bearish, it's not enough to stay within this pattern. We need to break it to the downside. So this is the scenario that ended up playing out. We didn't break to the upside. We didn't stay roughly there once again. We did get rejected. But exactly as I described, for the time being, that doesn't mean much. It just means that for the time being, we're not breaking out to the upside. Now, from not breaking out to the upside to turning bearish, there is some distance we have to understand.
Yeah, kind of like the Fed not tightening and just being on hold.
Exactly.
Before they ease. So it's a process that we have to go through, and your confirmation is going to be underneath the bottom megaphone line.
Yes.
Okay.
Yes.
All right. Very reasonable. Anything else while you have your screens up that
yes, since I took the screen, there are three things we can talk about today, because in general these have not been very volatile markets. I mean, here and there we do have a move. Yesterday, of course, the big mover was the Kiwi. But what I was paying attention since yesterday was the Aussie, because the Aussie at the lows of the day was testing again this channel trend line support, which we seem to be breaking down from today. And with this big move that we got yesterday in the Kiwi, we covered the ground because there was some distance. The Aussie was yesterday testing that trend line support. The Kiwi had some distance from its equivalent trend line support, but with the overnight move, we're 1.8% lower on the day. As you see, the Kiwi is now also testing this trend line support. So it looks like the Kiwi wants to follow lower the Aussie, and obviously if we do get follow through to yesterday's risk of move, both the Kiwi and the Aussie should continue to the downside, right? So
what triggered the Kiwi downside acceleration?
Overnight data, but I don't care so much about the trigger. I care to see if there's going to be follow through. And as I said, since the Aussie already seems to be a little bit ahead, my gut feeling tells me that there is a very good chance that both of them are going to continue to the downside, while at the same time we have the USD CAD that is testing resistance, because obviously here the USD is in the other part of the equation, right? So USD CAD also seems likely to make a move, but in this case, obviously in the opposite direction, right?
Yes.
Listen.
And listen, Blake is now
listen.
We
are.
We are.
You guys listening?
Yeah.
And you got to
No,
listen to Steve's gut. I mean, I've seen Steve's gut in person, so you got to listen to it. It's big.
Yes, it is huge.
Can you rest, Steve? Do you have a shelf? Can you rest your plate when you're sitting on a chair? You know what I mean? It's like having a TV table, where you put your drinks and your food.
I can tell you that I've got myself in decent shape
All
the
right.
past year, and now I'm also losing some weight. So I think I'm,
All right.
I'm moving in the right direction.
All right. You're svelte. Blake, nice pip on S&P.
Thank you very much.
Because you
Dale,
know what
Go.
when I left you, so okay, I
Grab the
wasn't.
screen, Blake.
Yeah, during F.A.C.E, the game plan or early this week was to wait for the debt ceiling to be solved and sell into it. So I know this happened after F.A.C.E, where you put the pip out there. What was it that gave you the go signal on the S&Ps
it was a double top trigger. I mean, it was simple technical analysis, but so if you were like here, I can go to the S&P room. This is our S&P chat room. Let's go over to yesterday. I have to go you have to give me a little bit of time here. So yesterday, that's when we finished the double top. So this is hold on, I'm sorry guys, it's in double top triggered in S&P. So it's right here yesterday morning at 6:16 a.m. so literally 23 hours ago. And then so once we tripped through those stops, we worked lower. This is all the chat room, right? And just right. And then whoops, didn't mean to do that. Then we completed from there. And so I think it was just simple technical analysis. And the problem is everybody was positioned on the long side in the market, because if you like listen to everybody and what was happening, we're at 4,200 trying to probe above 4,200. You got so many people were stuck long right there, thinking, oh, this is a breakout, we're going to 4,300, which by the way, I was in that camp too. I was like, okay, here we go, we're breaking 4,200, we're trying to get a foothold, we're going to trade up towards that 4,300, which is, just so you all know, it's 161% extension of this move. The last down move, which is the 38% retracement of that move. So I was like, okay, we're going to 4,300. And we got far enough just to squeeze out every long, right?
Every stop was taken out.
Every stop was taken above the highs. All the shorts said, you know what? If I can't beat them, I'm going to join them. So you got everybody long, you got everybody squeezed out short, you got everybody talking about being long, and then of course it opens up some downside. And so I think you got to think when you're trading, when you're like, this is one thing that I do all the time, and I talk about it like in the some of the training videos that we do and the YouTube shorts. I mention this all the time. You have to think about what the other person is doing opposite of you, so and how they're feeling. So for example, if I'm long, if I'm long some sort of asset class, and I try to think, how do shorts feel right now, or vice versa. If I'm short, how are people that are long feeling? And as long as you put yourself in that frame of mind, you can kind of understand what the other side of the market's going to be doing, and why they might be a little nervous. And in this case, you break through the 4175 level and it opened up the downside. So that was it. That was pretty much it. The real interesting move though, Dale, was the Kiwi.
Yeah.
that was the big one. We talked about in the week ahead video, if you could get short up here. Whoops, I didn't mean to do that. If you could get short near the 618 retracement. And we, on Monday, Tuesday, we rallied right into the 618 retracement again. and just rolled over. Hey, Ryan, what was the, in your opinion, what was the big reason why the Kiwi was sold so aggressively? I'll tell you what my opinion was.
Yes, as we said yesterday, we're talking about yesterday, there was three outcomes. The market was expecting 25 or 50, and it got a 25 stroke pause. The Kiwi was already weaker going into data, so it was the price move just kicking in an open door. There was no buyers before the announcement, and there was certainly none over the announcement.
Yeah, and then they started talking about rate cuts in 2024, which is moving up the goalposts a bit. So, man, the Kiwi just got absolutely destroyed, and I was short some New Zealand yen yesterday. So I was hoping, some of you guys and gals were short the Kiwi, because that was the plan. If you go like the week ahead video, one of the things I always pride myself on, and I know our team does just in general, we don't tell you after the fact, oh, you should have done this, and oh, why you can't believe you weren't. We try to frame you up before the market moves to give you an idea of like how to position yourself into key events like that. And so, look, we're all pretty clear here. Break below, 86.30 was going to be bearish. And if you're following along just in ForexAnalytix, we talk a lot about the 87.30 level, so it's really key developments in the market. So hopefully you guys are prepared for these events as they happen. One of the tricks of the trade, if you will, for me, is always trying to get myself into a position ahead of key event, which I think if I think it's going to work out one direction, then I'm trying to position myself in that direction ahead of time. So and because this way you can manage your risk a lot better when you can do that. So anyway, just some key developments overnight. I don't know if you saw the message, Dale. Mark Chandler is in Buffalo, New York at a hotel. He is going to he's here.
He's going to be on the phone. I see him in
okay, cool,
attendance.
Great.
Yeah.
Fantastic. All right. So before he gets here, we haven't heard from Stelios this morning. Stel, looks like we got your bounce in the silver market. And I got to point out something before you talk here. Silver came really close. Whoops, right here. Silver came really close to the double top completion. I would pretty much argue that, I was targeting 23. We got to 23.11. That's pretty damn close, right? It's good enough for horseshoes and hand grenades and government work, what you would always say, right, Dale?
Yeah.
Yeah, I mean, pretty damn close. What do you think, Stelios? Is that it?
Good question. It depends on what happens with the, as with everything, with the debt ceiling and the resolution of that. If and when it gets resolved, I think the knee-jerk reaction will be to buy the dollar, which is a perverse reaction in my opinion, but that's what's going to happen probably, which means that metals are going to be under a little bit of stress. So I'm not ruling out a trip towards 22, but you are absolutely right. I think the pattern we can chalk it up as a completion for now. So we wait for the debt ceiling. It's interesting that Joe Biden, was it, who said that debt default is out of the question. So, and I think that is out of the question. They're not going to default on US debt, but the question is, what happens? Do we get to a shutdown? Do we get to the same shenanigans we got to 10 years ago?
Yeah.
We don't know. That's the problem. And they're doing the same theatrics all over again. So do I think there's a chance that we go lower in metals? I think so. And I think actually it's 50-50.
One of the things that would support metals would be a move higher in bonds and move lower in yields, right? If yields started to roll over a little bit, that's going to support precious metals.
Yes. And the 10 years gone. The 10 years gone from 340 to 370. And that's been a pretty steady move, right? We've been going almost on a 45-degree angle. So it's definitely putting weight onto the metals.
Yeah, but now that we're pulling back from like the 618 little false breakout in the 10-year, you can see it right here. We completed the bull flag pattern. You know, yields continue to come off. That's going to be supportive of maybe gold and silver in the days ahead. So maybe that'll be the case.
Maybe, yeah.
Hey, you know, real quick in other news, you know, I can't help but notice there's some commentary around the LIBOR, you know, situation that you were involved in. Can you tell everybody a little bit about what's been going on? And let me go ahead and make sure I mention this to you or to everybody out there. And let me remove this really quick. If you guys haven't read Stelios's books, make sure you do that. You can see the book right here. Let me get it to you.
Well, you can't. I'll put a link to it. Don't worry.
No, yeah, you can do that, but I'm gonna fix my background here. So, but anyway, go ahead. Tell us a little bit about what you're seeing there.
Yeah, well, basically, there's been some. I don't know if you people are aware of the LIBOR story. It's there's been more information and evidence that's been uncovered, and you know, our story, which was the truth, which was that it's been a huge scapegoating exercise. It's now coming true, and it's being shown with evidence. So it's very interesting. We had a session in the UK Parliament yesterday, and basically it goes all the way to the top. And I do mean the top CEOs, bank CEOs, Chancellor of the Exchequer or Bank of England and all that. So it's going to be interesting. We've waited 10 years for this to be uncovered, and it's finally happening. So we're all very happy.
Yeah, no, that's great. I'm, you know, and for those of you that haven't read that book, he put the link in the book, Truth and LIBOR by Stelios Kontogulis. I think it's well worth the read. I've read most of the book. I actually listened to the and I also listened to there was like a 6-part series, Stelios, that you posted for us like a long time ago.
The BBC did that, yeah.
That was really good too. It's easier for me to consume as I'm doing analysis, like to listen to that. I'm an audiobook kind of guy. What can I say? So,
yeah.
but anyway,
the main thing is that we've been fighting for this for so many years. The number one reason is to make sure that it doesn't happen to others. We can't turn back the time. What happened to us was ridiculous, and it destroyed lives. People went to jail for this. But the main thing is that when the truth comes out, maybe it becomes, and people get punished for this, obviously, maybe next time the big guys want to scapegoat people, they're going to think twice about it. So, yeah, keep your eyes on this. Next few weeks are going to be pretty big, I think.
All right. Well, hey, just real quick, Ryan, you're still here. Stelios, Steve had to leave. He had to jump into another meeting. And Dale, so in the days ahead, and Dale, I know you're going to have a discussion with Mark Chandler, which is awesome. I can't wait. I love having Mark here. He's like I tweeted, he's one of my favorite people, hands down, in the financial markets. And he is probably one of the most knowledgeable in FX, hands down as well. So, Ryan, what are you expecting over the course of the next couple of days? Anything that you got your eye on right now?
As mentioned earlier, Bailey at 2:00, so in about 30 minutes. As I say, could be a mover for the pound. And apart from that, we got just this debt ceiling crap to wade through. No doubt we'll get some more comments during the day, and we see whether we're closer or further away from getting a deal there.
All right. Stelios, anything that's hot on your radar going into today?
The main event for me was the S&P false breakout. And so we're now stuck in a range 4,200 to 4,210, whatever that was, to 40.50. I still think this gets resolved to the upside once we get the debt ceiling pushed higher. But until then, not much to do, I'm afraid. But it doesn't make a lot of sense to me in terms of macro global environment to be long stocks, but I think this is going to be the breakout that is probably going to be worth chasing after it happens. Until
I can't wait to fade your ass. I cannot wait to fade your ass, Stelios. I cannot wait to be on the other side of that trade. Sorry.
Well, I'm just saying towards 4,300. That's where we get short.
I'll be shorting it.
I think you missed it.
Don't worry.
You missed it, man.
I don't think stops were taken. I mean, 10 points above the highs. I don't think enough stops have been taken.
All right.
I think there's plenty more above.
Well, let me just tell you guys, I'm looking at the euro. We hit new lows, but got really close to 618 retracement, completed the bear flag pattern, divergent relative strength. I would not want to be short the euro down here. Not saying that the euro is not going to go down. I actually am wanting to short the euro. I actually do want to buy the dollar ahead of a debt ceiling announcement, and one of them would be being short the euro, being long the dollar against the euro. But I don't want to do it here. And I don't think we're going to have a resolution over the course of the next couple of days. I'm just saying that just because I don't think it's going to happen before Memorial Day. So what I'm going to look for is I'm going to look for a move in the euro, maybe back up towards 109, 108.50, 109, and I'm going to look to be on the short side then. But I wouldn't want to be short down here next to the 618. Just wanted to say that out loud. Also, let me mention this. On Monday, it is not only Memorial Day weekend or Memorial Day Monday here in the US, but it's actually a bank holiday in most of Europe as well. We will not be broadcasting on Monday. However, if some shit goes down and there's, debt ceiling announcements and blah, 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 I'll do an impromptu show. Just follow ForexAnalytix on Twitter if you don't already. I'm sure every one of you does here. But ForexAnalytix on Twitter, follow myself, Ryan, Stelios. We'll get the word out. We'll do an impromptu show if there's something that some major development and the market is moving, like
you can do it. I'll be on the beach, mate.
Yeah, I know. Yeah, I know. It might just be me alone, and Ryan will be watching football, and Dale will be, sitting at the poolside with a margarita. I get it. If it's just me, it's just me. It's all right. All right, guys. I want to say thank you all for being here today. Mark Chandler is joining Dale Pinkert. So, Dale, take it away.
Can you promote him?
What? Oh, do you want me to promote him?
Yeah, maybe I don't have to. Maybe I just allow him to talk because he's on the phone.
Here.
Hiya, Mark.
Oh,
there. He is.
He's coming over now.
Right. Hi, Mark.
Well, did he make his way over?
I see his picture up there.
Talking.
And then he just, now I don't see him anymore.
He says, no, I see him on attendees. It says Mark Chandler talking permitted. So he should be able to unmute.
Yeah, hit your unmute. He's on a phone, so I'll promote him panelist, see if that helps.
He was here. I don't see him anymore.
I see him in the participants room, Mark Chandler.
You see him in the attendees? I don't see him.
Yeah, I see him. I'm going to promote him. Hold on.
Oh, there he is. Yeah.
Damn. He needs to rejoin as panelist.
He's on a business trip, so that's why he's.
Yeah, and I'm trying to click the allow to talk as well, and it's not working. Shoot.
What?
I'll bring him back Friday. I think I have Friday open.
He declined to be promoted as a panelist. Let me try again. Hold on. Promote panelist. There we go. Come on. Please accept.
Since he's on mobile, might be a little bit different for, from functionality standpoint.
Oh, well, I'll get a hold of him on Twitter. Let's see. Friday is open if he can make it. Mark, if you can hear me, I'll reach out to you on Twitter. Maybe you'll be back from Buffalo by then. Or we'll do it another time, I guess. Anyway, I will tell you that Mark was going to make a lot of sense today.
Yeah, and I'd love to hear him on Friday. If you can manage to get him back here, I'd love to hear his thoughts about where we're going to go with the debt ceiling. He's probably one of those. He's one of the few people I actually really want to hear his opinion. I know he writes his column every day. We post on Trader Summit every day, but just to hear him and his opinions would be great. So if you can get him back on Friday, that'd be awesome. Was that
okay? I'll make the offer to him.
Cool.
I'll get a hold of him on Twitter.
All right.
Yeah, that's all we could do. So anyway, Great session. You know, I mean, and you know, you can't repeat what you did yesterday in S&P and NASDAQ every day. And you know, that's something I want to say to everyone before we leave, is that, you know, opportunities like that occur yesterday, don't expect them to happen every day. I mean, that trade took a long time to set up in the S&Ps. First, we had to get to 4,200. Then we had to see how it acted at 4,200. Kiwi was outperforming, holding up better than Aussie, and then made up for lost time. So anyway, great trading yesterday. I think that if you know, took some of these patterns in play, you had a good week already. So that's the way I look at it. Sometimes it's okay to do nothing and just manage you know, a turning point that, you know, Blake may have caught with that S&P's 4120 by Friday's close is a 2-week reversal. And something else, NASDAQ's acting weaker than compare candles to S&Ps. They led the way up. I expect them to lead the way down. And don't just count your pips, count your blessings, everyone. One of mine is being part of the team at ForexAnalytix. Invest in yourself and become part of this community. I rest my case.
Thanks, Dale.
All right, so guys, good luck today, and I'll try and get Mark for Friday. Tomorrow we have Lakshman Ahutang. I have a hard time with his last name, from Economic Cycles. Elite. It's going to be nice. It's going to be great to hear. Last time I talked to him, he said hard landing. We'll see what his numbers are showing tomorrow. So have a great day, everyone. Thank you, team. And thank you, Stell and Steve and Ryan. Great to have you back, buddy. And we'll see everyone tomorrow. Good hunting. Adios.
Ciao, Dale.
Ciao, man.
All right.
Ciao,
Sorry,
man.
I was actually typing to Mark. He said he tried to switch the connection and he apologized. It crashed. So
okay.
Damn, Zoom on mobile.
Okay.
All right.
We'll get him Friday.
All right.
All right, guys.